Jimmy, what's going on in the market?
Well, you gave me this sheet yesterday that's on the screen, and I'm looking at this sheet, and the first thing that jumps out at me is 23.62% of year-to-date daily sales are non-owner occupied. That means investors are buying 1 out of 4 houses, non-owner occupied. Investors have not fled the market.
That's true. They haven't. Do you think
And then,
it's they have cash?
yeah. And so the next thing I look at then is the $1 million homes, and 1,073 year to date, average 4 per day, every day 4 a day, $1 million homes. The money, if you follow the money, I mean, that's as good as we've almost ever done. It's really close to our record, 4.58 in 2021. And you shared with me last night, there was this, you said that we went up to 88 per day or something like that, which is, we're ahead of this time last year.
Well, yeah, we're doing 88 daily sales, but in October we're doing 56 a day, and last October we were doing 52 a day. So we're doing 4 more per day, and it says 3, I guess, because there's fractions in there. But anyway, yeah, it seems like you said the interest rates hit us last October.
Right. And a lot of deals fell through. So we're not having deals fall through anymore because of interest rates. We're having deals fall through. Sometimes buyers get cold feet, but it's not the interest rate, because we already know that.
But if you look at 2022 overall, we were doing 112 sales a day, and we're doing half that now.
Yes.
We're doing 56 sales a day right now in this current October month.
Yeah.
And in all of the average for 2022 was 112.
Well, 2022 October month to date was 52. So October's always slowed down. They talk about some markets where there's snow and hurricanes and they're seasonal, and they say Las Vegas isn't seasonal. I would beg to differ. If this happens every year in October, that's a pretty significant drop.
It is, yeah. Well, we're still selling homes, but not as many. The interest rates are bothering some people, and I believe yesterday in our Chris Voss class, which was awesome, by the way.
Thanks.
It's a shame more people didn't come, because we did invite outside of our company. So I'm going to put another. By the way, I'm going to put another video out there for people to come. Correct?
Yeah, sure. It's Friday.
They just have to come to the classroom. It's not a Zoom class.
Right.
Right. But so anyway, that was an awesome class yesterday. And somebody in the class said that there are Canada and another country, I forget which one, someplace in Europe, where you can take your mortgage with you. So if you have a 3 or 4% mortgage and you want to go buy another home, you can take that mortgage with you. You just have to pay the difference in the equity, or the down payment, as it is.
I think that was Annetta, because it's called Porta Mortgage, and she was telling me about it too. So I think that might have been her, but it's something different for us, for sure.
It really is. I think that would solve all our problems, but I don't know. I mean, and the other thing too, Jimmy, I thought about this. So if I have a 3% mortgage and the mortgage company says, okay, you can move that mortgage, but I'm going to raise you 2%. Now there's a mortgage company that wouldn't have gotten a mortgage. Okay. But at least they're going to keep the one you've got and add 2% onto it. I think we need to start thinking outside the box here, maybe.
Well, on this chart that you have on the screen, the thing that impacts me the most is the percent change in home prices since Q1, first quarter 1991, Q2 2023. Now, I realize that's 30 years, but percent price range, 297%, national
Yes.
average, 300%.
Yeah.
So I realize it's 3 decades, but real estate is and always has been the best way to accumulate wealth. We're not good savers as a country typically. So if I bought something 30 years ago, it's tripled in value, and by now it's paid off. And I think what agents have to come back to is, what is the basic reason people buy a house? And I should say basic reasons, because there's more than one. And the first one is shelter, obviously. And when you rent a house, whether you rent it or buy it, you're getting shelter, but you have no control over rental. If the landlord decides to sell it, you got to move. And that's a problem. So the reasons for buying a house haven't gone away. And when there's less sales, that means maybe a little bit less competition for buyers. When do you buy a house? When nobody else wants to. That's the ideal time.
Exactly. Yes. And so what you're saying is, well, if this is kind of, if we're lagging behind in sales, maybe it's the time for people to buy. Because if the interest, I mean, there's different scenarios. If the interest rate goes down, then people are going to come back into the market. There's going to be more competition. The prices might go up. Although some people, which we're going to hear in this video in a minute, some people are predicting that the prices are going to go down like 30%. And if you bought in 2022, I mean, prices have escalated 42%. So if you bought, which is insane. So if you bought in 2020, let's say, you're still okay if prices do go down.
I just don't see prices going down. I mean, they've been saying that for some time, and it hasn't happened. And rates have gone continuously up, and fewer buyers in the market. So less mortgages to make. Lenders have to make loans or they go broke. I don't see average price, median price is still, you showed me a 10-year chart and we're like the last 4 years, we've been really flat, 450, 450, 450.
Yes. And in other places, prices are fluctuating, some up, some down. California, they're down. Austin, they went down. Dallas, I think some went up. Some places in like Connecticut, prices went up. So it's scattered throughout the market. And like you said, real estate is local. Yes.
Yeah, I'm just looking at this chart that you have on your sheet here. I mean, people should, when somebody says, what do you think is going to happen to prices? Well, I got to ask them, are you a short-term thinker or a long-term thinker? Because if you're short-term thinking, that's a trap of real estate. You don't get into real estate short-term. You get into real estate and you hang in there. Some of the commercial investments you told me that you and John made, you guys held on to those for 25, 30 years.
Yes, some of yes, we did. And we made money.
Yeah.
But yeah. So that was a good thing.